Hello, I'm Greg Hunter. Thank you for joining us today on USAWatchdog.com. With us again, Fabian Calvo. Of course, he has the NoteHouse.us. His company handles $100 million in distressed real estate and debt a year. Also, he has, important, both YouTube and .com, his internet site with the same name, Fabian for Liberty. Fabian Calvo, thank you for joining us today.
Thanks for having me back, Greg. It's a pleasure.
Well, all the good news with the housing, prices are up, the bottom's in, it's part of the recovery. Is that true? Are we in a housing recovery after the last time you told us that we haven't even scratched the surface of a bottom yet?
Well, we haven't scratched the surface with respect to the distressed debt still out there. Over 20% of homes in Florida, for example, are in foreclosure. Foreclosure rates are still consistently high. There's a tremendous amount of shadow inventory. So there's still a tremendous amount of distress in the market. There's no question about it. Any recovery now, the housing prices we're seeing go up very slightly is due to the manipulation at the hands of the Fed, interest rates policies, also a lot of big institutional buyers like Blackstone buying billions of dollars of real estate last year. So there's a lot of money coming into the market. There's a lot of manipulations by the government agencies and also by the Fed that are kind of creating this rise in asset class prices like you're kind of seeing in the stock market. But it's all an illusion.
When you say there's a lot of shadow inventory, we're talking, 3, 4, 5 million homes. How big is that inventory they're holding off the market to keep the prices higher?
I mean, tens of millions, right?
Oh.
I was at an investment group meeting last year, middle of last year. They were saying it was close to 20 million homes, shadow inventory on the market, vacant at any time on any given night in America. That's not to mention, though, the millions of people that have not made mortgage payments and are not in foreclosure whatsoever. The banks aren't even going after this. So what you have is you have a lot of the big banks and a lot of the smaller FDIC banks. They're getting all this cheap liquidity from the Fed. They're not really they're holding back on foreclosing on people because they're waiting for the asset prices to go up, or what they think will happen is that they will go up. And then at that point, they can do some kind of workout and they won't take the hit on their balance sheet. That's the strategy a lot of these people are trying to do, and they're basically doing it with taxpayer money.
The interest rate, let me just tell you, I wanted to kind of bring in some quotes I got recently from the former CBO director, David Stockman, and you're in good company. He says there's no real organic sustainable recovery. And that's to your point, saying they're manipulating with buying these bonds and holding interest rates down to around 3.5%. We're in a housing bubble once again, according to David Stockman. He says we're creating another bubble, especially in places like Phoenix, where it had these big run-ups, and Las Vegas, and maybe even South Florida. Also, he says the market is really, organically, we have a bunch of, baby boomers who are people trading down sellers and not, people who are trading up buyers. That's the market. What happens, first of all, we have about 3.5% 30-year mortgage rate, fixed mortgage rate. The Fed is basically helping to create this bubble and not letting the market actually bottom to where we have real interest rates with them buying this debt. How long do you think they can hold these fantasy interest rates down to 3.5% for 30-year?
Well,
money?
I think they're gonna hold them as long as they have to get some kind of something going, or at least they believe this is going to work. I don't believe. I think it's going to end up in some kind of currency crisis, some kind of bond crisis. Eventually, countries around the world will basically, say, what, we don't trust the dollar anymore. We're not going to buy government debt anymore. And then basically the Fed will have to manipulate and buy all U.S. treasuries to finance the government spending and to basically finance the debt. So, it could be 2 years. It could be 4 years. I personally think the Fed is going to pull out all the stops in reinflating the bubble. Why do I think that? Over the last year, FHA, a third of all the loans they've made required 3% to no money down. So only 3% to no money down. They're back.
Excuse me. A third of all loans at the FHA, a third, 3% or less, down to 0%. Right. A third of all the loans.
And yes, and 0% no money down loans for what they are saying are qualified buyers. So they're back to refueling this. Now, again, why are they doing this? Because the banks are holding a tremendous amount of distressed debt. And what they're doing is they're saying, okay, we'll start to make loans to as many people as we can. We'll do it for, 3% interest rates, no money down, and asset prices will go up. And then we could unload all this junk debt, all these toxic assets on our balance sheets. That's when we could unload it. And we could then have a whole nother bubble, but it'll be the people that'll be paying for it, not the bank. And so that's what I believe their strategy is. It's a bunch of collusion between the big banks and the government agencies by also only allowing a certain amount of inventory to hit the market. So the market's being manipulated right now, Greg, like any other market. We're seeing, the LIBOR rate, 800 trillion in contracts being manipulated, the stock being manipulated. It's all being manipulated. So investors just need to know what they're getting themselves into.
Okay, devil's advocate here. John Williams was on recently. You may have seen him. He had a bunch of views, a lot of people. He's the economist at chattlestats.com.
Sure.
And he said something very unusual. And here's what he said. He's always said that there could possibly be a dollar sell-off at any time. He's been saying that for the last year or so, which, there's 12 trillion liquid U.S. dollar assets held outside the country, treasuries and the like, government debt. So all these people are holding these treasuries outside the country. He thinks by May, the dollar's going to start hyperinflating. If that's the end of the road by May. What happens if all these big money players wake up one day and realize, oh my gosh, the Fed can't hold interest rates down. They're losing control. Everybody's dumping treasuries. Everybody's dumping the dollar. Interest rates spike up. What happens if these Einsteins that got us into this mess in the last time, zig when the market zags and interest rates shoot up? What happens to the real estate market and all these investors?
Oh, well, interest rates go up to 7, 8, 9, 10%. And of course, housing will be devastated and it'll drop dramatically. It'll be in another depression. That's for sure. So that's why the Fed realizes that they have to keep rates as low as possible, and they need to these phony kind of investment vehicles that throw all underwriting guidelines out the window with typical underwriting, or you have to put money down 20%, 30%. That's out the window. So I just don't believe, Greg.
So that's not happening anymore. 20% down. They said they're going to get tough with making the qualifications for people. They're going to be a tough time. People getting loans. You're saying that's out the window. That's over now.
They're going to continue with the policies of no money down loans. The FHA will continue to expand, doing more loans to people with very little equity in, 3%, no percent, whatever percent you could do to basically buy the home. Here's where I disagree with John Williams is that I don't, although of course, and I say this all the time, the currency crisis, the bond crisis could happen any morning. You could wake up and there could be a huge sell-off. I just don't see there being an alternative right now to the dollar, where if they're going to sell off all the dollars, where are they going to go? I don't think that the Chinese yen, I don't think that currency is ready to take on the world reserve currency. I think there's too many problems still in Europe for Europe to go along with a plan like that. China and Japan are almost at war, so I don't think they're going to interrupt global trade to ditch the dollar as an international reserve currency. So I just don't see that happening anytime soon. And the Fed as well. The Fed realizes it needs to be a low interest rate environment for housing to recover.
That's for sure.
Or it's a huge implosion. They're not going to let interest rates rise. They'll do whatever they have to. And Bernanke's already shown that he'll do whatever he has to.
But they could get this wrong. If you're betting on the Fed to make the right decision, you lost a lot of bets in the last 10 years.
It's not that they could get it. They will get it wrong. I'm not saying that this is going to be great moving forward. I just believe we have 2 to 4 years at least of this low interest rate climate. Another reason is I see the big money again. People like John Paulson, he's buying vacant land like crazy in areas like California and Colorado. He's bought enough land to build over 25,000 homes. Blackstone's bought $2.7 billion of real estate in just the last year. So a lot of investment money going into housing, a lot of hedge funds going into housing. A lot of those guys typically have their ear to the ground. They know what's happening. They know what's coming. And so that's why I think in the next couple of years, at minimum, we're going to continue to see prices rise moderately. A lot of investing demand go into real estate, and this mini bubble is forming. There's no doubt about it.
What happens if they're wrong? What happens if John Williams is right, and people start selling treasuries to buy gold, to start doing yuan trade agreement swaps, currency swaps. They're doing that all over the Asia. Japan, China, even though they're at war, they're using these swaps. Even they opened up a currency swap, a yuan swap in London recently. So what happens if we don't have the 2 to 4 years? What happens if John Williams, his near-term prediction, which is something he's very unusual, has ever done this before, said, by May, I think it's over. I think we have the beginnings of a big dollar sell-off, a big bond sell-off. It's going to be the end of the road. It's the end of story. What happens if he's right?
Well, if he's right, again, housing prices will fall again, and you'll see contagion pretty much spread across these banks. You'll have a lot of banks go bankrupt that are still bankrupt. I mean, there's a lot of these zombie banks that if you mark to market their assets, they would be bankrupt. But again, because of the cheap money policies of the Fed, they're able to show as, they're healthy and they're able to, still make loans and they're able to hold off on these toxic assets from basically eating away at them like a cancerous tumor, really. But if John Williams is right, if we see there being a bond crisis, if we see the dollar, the Fed will just begin to monetize like crazy. You will see inflation take root, and it could be one of the reasons a lot of these hedgies are buying real estate is because they want to have something of tangible. It's why Paulson could be buying land, because typically in an inflation scenario, land does pretty well. So it could go either way. I personally don't see that happening by May. Could it? Of course, it could happen tomorrow.
Fabian Calvo, thenotehouse.us, and Fabian for Liberty. Thank you for being on USAWatchdog.com.
Thanks for having me, Greg. Pleasure.